Welcome to this session, Learning Outcome, Section 2, Cash Budgeting and Forecasting Techniques. Are you ready to master the art of cash management? In this session, we'll explore essential techniques for budgeting and forecasting cash flow, helping you anticipate future liquidity needs. Learn how accurate forecasting can safeguard your organization and empower smarter, strategic decision-making. Cash forecasting answers critical questions about financial obligations. It helps determine if there are enough funds to meet upcoming payments. It identifies when surpluses or deficits may occur. Actions like borrowing or investing can be planned accordingly. Regular short-term and long-term forecasts are essential for effective cash management. Cash forecasting originated in large corporations during the 1970s and 80s. It was crucial due to inflation and interest rate volatility. Over time, it became vital for SMEs as well. Modern forecasting uses historical patterns and real-time data. Cloud systems have made it accessible to smaller firms. Before building a forecast, gather essential data. This includes bank statements, sales pipeline, and purchase orders. Payroll schedules and tax obligations are crucial too. Loan repayment schedules and historical data are needed. Accurate data prevents misleading forecasts and errors. A cash budget starts with the opening balance. It includes forecast inflows like customer receipts and loans. Outflows cover supplier payments and payroll. Net cash flow is calculated by subtracting outflows from inflows. Closing balance is determined by adding net flow to the opening balance. Short-term budgets focus on immediate liquidity. They are detailed weekly for accuracy. Customer behavior and invoice dates drive these forecasts. They help assess the need for short-term borrowing. An example reveals how management can avoid liquidity dips. Long-term forecasts support strategic decisions. They are based on revenue forecasts and cost structures. Seasonality and inflation are considered. These budgets aid discussions with banks and investors. They help assess compliance with borrowing covenants. Several techniques are used in forecasting. The direct method tracks actual cash flows. The indirect method adjusts projected profit. Working capital-based modeling uses historical data. Scenario analysis models different budget versions. A training provider expects specific cash patterns. Monthly sales and payment schedules are outlined. Expenses and VAT obligations are included. The cash receipt pattern is detailed for clarity. This helps management see when VAT pressures coincide with slow payments. Forecasting errors often come from overestimating payments. Ignoring seasonality can lead to inaccuracies. Tax obligations must be included in forecasts. Communication between departments is crucial. Outdated data should be avoided for accuracy. To improve accuracy, compare actuals against forecasts. Tighten invoicing processes for better predictions. Use historical averages for debtor behavior. Maintain a live operational calendar. Contingency plans should be based on worst-case scenarios. Forecasting supports various strategic decisions. It justifies investments in equipment or staff. Planning for overdraft needs becomes easier. Timing major purchases is more precise. Financial oversight is demonstrated to lenders. By now, you should understand the origins of forecasting. Recognize the difference between short and long-term budgets. Know the data and assumptions required for forecasts. Understand cash receipts and payments over time. Realize the value of scenario planning and realistic assumptions. Refer to ebooks and journals for further reading. Contact LearnerWork at UKversity for queries. Assignments are submitted 2 weeks after unit completion. In conclusion, we have learned that You now understand the fundamentals of cash budgeting and forecasting. These techniques offer valuable visibility into financial flows and empower more informed decision-making. By applying these insights, you can strengthen your organization's financial stability and drive better strategic outcomes. If you have any questions, please feel free to contact us at 074843616888. Our team will be more than happy to assist you. Thank you for your attention, and we look forward to seeing you at the next session.